Hello guys, welcome to TradingHawk YouTube channel. So this is part 4 of intraday strategy using only moving averages. Part 1, part 2 and part 3. Those videos are already out and the link of those videos are already in the description. So before you watch this video, better to watch all these 3 parts and then come to the part 4. So here, this part 4, we will be using these moving averages to take the counter sell or the counter short trade. Part 1 was like we are going with the buying trade, part 2 was going with the counter buy, and part 3 was going with the sell trade, and now part 4 is going with the counter sell trade. So generally what happened for our sell trade, this was the scenario, like 10 moving average. Let me draw once again. So 10 moving average should be below 20 and 20 should be below, this is black line is 100 and this one is 200 simple moving average. So we can see that 200 moving average is greater than, or we can say in the simple sense, 10 moving average is less than 20, 20 exponential moving is less than 100 EMA, and all these 3 exponential moving averages are below 200 moving average. So this will give you the good short term or bearish trend. So this we already gone through in the part 3 of the video. But now what happens if you want to take the sell trade? But this condition is not there, but you want to take the sell trade in the counter. You want to take the sell trade but as a counter sell trade when the moving averages are not giving you the exact bearish trend, but it is giving you, the price action is giving you the signal of bearishness. So let's see in this example. So first rule, let's say you want to take, here your 10 exponential moving average is greater than, so this is your 10 exponential moving average, this is your 20 exponential moving average, this is your 100 exponential moving average. So to take the quick counter sell trade, what you have to do, if your price, but maybe not with red so that it will be easy. So if your price is moving here above all this in the bullish trend, but as soon as it gives the closing below 10 and 20, so whichever the candle is giving the closing below 20, mark the high of that candle and keep the stop loss here and enter on the next candle whichever is breaking the low of this candle with the first target of 100 exponential moving average, or if this 100 exponential moving average is far away, then you have the risk reward. So 1:1.7 will be your first target, then 1:2, and then 1:2.5. So this will be your short trade targets. So I will explain it once again. What you need to do in your bullish trend setup, your 10 exponential is above 20 exponential moving average, and your 20 exponential moving average is above 100 exponential moving average. So this is your scenario at this moment. So in this case, what you have to do, how can you take the short trade? So your price is moving up, and if it is starting to coming down and trade below 10 exponential average, then we will not take any trade. But as soon as one 5-minute candle closes below this 20 exponential moving average, so let's say the candle looks like this, here is a bit weak and here is a bit weak. So what you have to do, and your 20 exponential moving average, it is giving the closing below this 20 exponential moving average, and your 100 exponential moving average is somewhere here. So what you have to do is you have to enter on the next candle breaking this low immediately. On the live candle you have to enter in this candle and keep the stop loss above this high of this candle and take the entry with, if this 100 exponential moving average is very near, then you have to take the target as 100 exponential moving average as your first target, and if this 100 exponential moving average is far away, then your entry should be with risk reward 1:1.7 should be your first risk reward, then 1:2, then 1:2.5. This could be your maximum targets for your counter sell trade. Hope this is clear to everyone. So now let me give you one example. Here we can see this green line is your 10 exponential moving average. Orange is our 20. 100 is this black line is our 100 exponential moving average, and this dotted purple line is our 200 moving average, and our time frame is 5 minutes. So here we can see the price is just consolidating here, but we want to take the short trade. So as per the rule, any candle which is giving the closing below this 20 exponential moving average, and this trend is a good bullish trend. You can see 10 is greater than 20, 20 is greater than 100, and 100 is greater than 200. So we can see this is a very good bullish trend, but we want to take the counter short trade in this bullish trend because this is also giving you some gap here in the gap up opening. So let's say if we can take the counter trade in this situation or not. So we will wait for a 5-minute candle to close below 20 moving average to get enter into the counter sell trade. So let's see what we can get here. So far none of the all the candles are just moving around the 10 exponential moving average because it is a short term support and resistance. It can work. Still none of the candle is giving proper closing below the 10 exponential, and this 20 exponential moving average is getting closer to 10 exponential. So this candle is giving the closing below 10, but we want the closing below 20 exponential, because look, the 20 will also the next support and resistance that will work if it is giving the breakdown of 10. So generally what happens, these two are like short term moving average. So if it is breaking the 10, so it will get the support from 20. Now if it is going up, if it is 20 is working as a resistance, and if it is breakout, then 10 will work as a resistance. So these two are like temporary short term support and resistance. If price is above them, so they both will work as a support. If price is below them, so they both will work as a resistance. So we are waiting one candle to close below. Look again, it is keep on taking support from 20. We want to have a proper candle to close below 20. Oh, still this is not convincing, but yeah, we can say it's closing. So perfect, this candle is closing below 20, but still not looking proper. But the good thing is that the high of that candle is not above the 20, so it already faced the resistance. So we can see that this candle is a breakdown. So breakdown of the low, we will enter. So we will just mark the low of this candle, which is giving the closing below 20 exponential moving average. So I just mark this low. So as far as in the live candle, whenever it goes, price goes below, we will just enter. And please make sure that this is counter short trade. So whenever you get the word counter, so your position size of your trade should be minimum, because the stop loss chances getting hit are very high. That's why we are keeping very small stop loss. So our stop loss will be few point above the high of this candle. So the high of this candle is 36,001. So we will keep a bit of a round figure like 36,000. This as our stop loss, and we will use this short position tool. So our entry will be immediate on the breakdown. As soon as price goes below this, our stop loss minimum will be here. In the counter, you don't need to chase for a big target. So we will, because 100 exponential is far away, so we will go with first 1:1.7 as our first target. The approximate we can see here. Then it was 1:2. We will consider 2.2, something like this. Then 2.5. 2.5 is also there, but it doesn't give you, because our stop loss is very tight. So that's why this risk reward is showing us big. So let's go with 3.5. And in ultimate case, we will go with this 100 day exponential. Let's see if we can achieve this quick counter short trade in this scenario or not. So as soon as on this live candle we entered, we don't have to wait. In the short trade, it's like quick fingers and you have to quick out. So here we enter, because why we are going quick in the counter short instead of we were not looking the same thing in the counter buy, because whenever the selling comes, it's always fast and furious. So that's why we will not wait for this low to break. So we will enter as soon as the price crosses on the live candle, and our stop loss is very less. So you can see we are already in this trade on this candle, and it almost hit our 1:7, but didn't get till there. So we will be in this trade until the stop loss get triggered, or until we will get the targets. Let's see what happened with the next candle. Look, as I said, the selling is always fast and furious. So here we will book most of the profit. And let's say you are trading with one lot, better exit one lot. Don't need to chase more. But you can do one more thing. Like if you are trading with one lot, keep on trailing your stop losses. So at least you will be in the profit. Like it give you directly this target of 1:3.5 target, and stop loss was here. Keep the stop loss a bit here. But if you are trading with 4 lots, 5 lots as a nominal, so you can take the partial profit here, then aim for this target if it can achieve it. If we see if it is 100, so it will be like 1:7 risk reward. Let's see what happens. So this is a chart of Nifty Bank, and we are watching on 30th of May. So this target 1:3.5 is already achieved. But let's see what we can get if we can keep the stop loss here, or let's keep the stop loss here. What happened in that? Okay, so stop loss has been taken out. So this is your quick short trade, and you are taking the quick sell trade in this type of scenario, and your trade is already done. So you got from to give only 37 or 40 points, you already get 130 points. Isn't it good? This quick short. So you don't have to be in the trade with the same situation. So this is the first scenario and the first example of the short trade. So now for scenario 2, it will be like your 10 exponential moving average is less than 20 exponential moving average, and both of them are above 100 exponential moving average. But in this scenario, your price is trading above both of them, and it gives the breakdown of 10 exponential moving average. So this here we need to get the closing of a candle below 10 exponential moving average. So what we have to do, we have to do the same thing. We will mark the high of that candle which is closing below 10 exponential moving average. So few points above the high of that candle will be our stop loss. So in this case, our first target will be 100 exponential moving average. But if this 100 exponential moving average is far, then we will go with our standard risk reward ratios like 1:1.7, 2, 2.5, 3, that type of a ratio that we can achieve in this short trade. But make sure this is counter short trade, and our stop loss will be few points above the high of that candle, which is giving the breakdown of 10 exponential moving average. In the scenario 1, it was like 10 exponential moving average was above 20 exponential moving average. But here the scenario has changed. It is now below 20 exponential moving average. So this is the different scenario. So first scenario, second scenario, and then we will go with the scenario 3. Now the third scenario to do the trade is like your 20 exponential moving average is here, and then your 10 exponential moving average is here, and your 100 exponential moving average is here, and let's say your 200 exponential moving average is here. So in such case, we will follow the swing law to break down, and then we can take the entry. So for example, let's say this is one candle. This candle is having this high and this low swing, or we can say wick. So what happened once this price is moving in this such manner, so it made this swing. So it is obvious that it will go near to this moving average, or moving average will come near to the price. So in such scenario, you have to mark this swing low, and once this reject from here and gives the breakdown, so as soon as the candle closes below this, you have to take the short trade. So once you take the short trade, your first target will be 100 exponential moving average, or else our standard risk reward ratio 1:1.7, 1:2, 2.5, 2.83, and you can go on until you have this far away from 1:3 risk reward ratio at least. So this will be your first target, and this will be your ultimate target of 200 simple moving average. So let's say next candle forms like this. It gives the breakdown, and just for the example, I am just moving a bit here, and this candle closes below and it is making the wick like this. So here we don't have to take the trade, and after this candle gives this signal by closing below the low of this candle, we will enter into the short of the next candle, and we will keep the stop loss maximum here, and then we will trail the stop loss with this 20 exponential moving averages. So your price, let's say it's moving here and there, and you already enter in the next candle. Let's say your 1:2 risk reward ratio achieved, you exited partial profit. Here you exited without thinking anything, you exit, and then let's say it is moving price action here, and this moving averages of 20 exponential moving average is coming here. Then you can trail the stop loss here, because earlier your stop loss was a few points above the high of this wick, high of this candle. So this is that you can see in this scenario, and this will be your maximum target. So let me give you one example, but let me repeat everything. There are total 3 scenarios. First scenario is when there is a good bullish trend setup where 10 exponential moving average is greater than 20 and 20 is greater than 100, like the good bullish or short term bullish trend. So these are the scenario. The first scenario is like this. So here we are entering once the candle closed below 20 exponential moving average, and we will keep the stop loss few points above the high of that candle, which gave the breakdown of 20 exponential moving average. And in this target will be, our maximum target will be 100 exponential moving average, as well as we will keep the standard risk reward ratio. And then the second scenario is like this, when 20 exponential moving average is above 10 exponential moving average, and both of them are still above 100 exponential moving average. So in this, let me draw it properly so that it will be easy. So this is your 20 exponential moving average, and this is your 10 exponential moving average. So here in this scenario, we will enter as soon as one candle breaks down this 10 exponential moving average with the stop loss of high of this candle, a few points above the high of this candle you can consider. And the target will be 100 exponential moving average and our standard risk reward ratios. And the third scenario is that, let's say if in the same moving average scenario, it made one swing low, and the next candle breaking down that low and closes below that low, and then we will enter on the next candle with the stop loss of the candle which gives the breakdown of the low of this candle. So that is the signal candle, and in that still the scenario, the target will be 100 exponential average. If 200 moving average is below this, then that could be our ultimate target. Otherwise we can trade with just our standard risk reward ratio. Hope this 3 scenario is quite easy to understand for taking the counter sell trade. I think it will be better, you will get it after having the proper example. So here we see the first example, like this candle closes below this 20 exponential moving average, and we enter in the short trade with the target of 1:, our standard risk reward ratio, and our maximum target will be here, and our trailing stop loss could be 20 exponential moving average. Let's say you are not entering with this scenario, you forget to enter. So now here comes the second scenario, sorry, the third scenario. Here comes the third scenario, because 10 exponential moving average is below 20 exponential moving average, and 100 exponential moving average is far below both of them. So here what you can do, here it made the swing. Let's say you are not entering on here, you forget to enter because maybe this was quick momentum and you don't want to enter. So we will mark this swing as of now, if the price is moving up or not. So we mark this. I will just remove everything. So here we will observe if this swing low is taken by, look, this took the resistance again from this 10 exponential moving average. So as I told you, when price is above this, they both will work as a short term support and resistance, and price is below this, they both will work as a short term resistance. Price above, it will work support, price below, they will work as a resistance. Again made the red candle, still coming down, still didn't give the closing below this candle, sorry, this swing low. So here we are not getting the entry, still there is no entry. So now if you see here, there was the second scenario trade, price is above let me just rewind a bit so that you can get it easily. So here it comes the second scenario. This is for this will help you, this counter trade is like a scalping quickly, that will help you in doing the quick scalping. So what will happen, the scenario 2 will be is like the price is above and 20 exponential is greater than 10 exponential. So as soon as one candle closes below 10 exponential moving average, then we will enter. So this is your second scenario example now. So we will wait for a one candle which closes below 10 exponential. So this candle closes below 10 exponential moving average. So we will enter into the short trade immediately on the next candle with the stop loss few points above. So I will keep the stop loss the high of this candle for the safe side. So I'm keeping the stop loss here. I will immediately order the short trade, and the first target 1:1.7 is coming almost somewhere here. So which is the swing low, this one. So it is coming here, almost the same. So we are keeping the, and max target will be here. Let's see what happens. So it is going and moving our entry price, and now it is giving the target. It's still moving around our cost price, entry price, and now it is going in our profit, and this gave the first target. So we will exit the first target because 100 exponential moving average is not that much far, and we will trail the stop loss with cost to cost or with this 20 exponential moving average. So our target done, and look, it reversed totally from 100 exponential moving average. So this is why we have to keep on looking at the 100 exponential moving average. As soon as it touches, we will exit. And now if anyone can see here, this swing low is broken by this candle. But if you want to enter, but let me first tell you. So scenario 1 was here. So this was our scenario 1. So this was our scenario 1. This one was our scenario 1 entry here, and on this candle this was our scenario 2 entry. Why we are not taking the scenario 3 entry now? Because 100 exponential moving average is very near. But why we can take the entry, right? Because you already get 2 profits here in the counter trade. So let's say if you are not taking any entry here, but if you are following the third scenario. In the third scenario, this is the swing low, and this candle gave the closing below the swing low. So we enter on the next candle, our stop loss will be just above the high of this candle. And I will mark a bit scenario 3 here, and we are entering into the short trade with the stop loss here, but the risk reward is not good. So here the risk reward is not good, but let's see if it can achieve. So 1:1.7. So 1:1.7 is almost here, and then 1:2. 1:2 is just here. 2.5 is almost here, and 1:3 is almost here. So let's see if it can achieve or give the stop loss. So 100 is here, it's very small, but we will go, and maximum target will be 200. So here it looks like it will take our SL. Yeah, the SL has been taken out. So this is why we also have to check our risk reward ratio. If it is near our 100 exponential average is near, then it will work as a support. So this was the scenario. We already checked in just one day, we get 2 scenarios for the counter short trade. So here are also some other examples. This is on 23rd of May. Like, look, this has been working as a support. 100 exponential moving average is below, then 20 exponential here and 10 exponential moving here. So you can see why I'm telling you to go with less quantity, and in the counter trade there are chances that it will hit your stop loss, but here we already entered. Now this is your activation, because this is scenario 1. 20 moving average has been taken down with this candle. So you are entering with this candle, your stop loss will be here, and it will take out your stop loss. So that's why we are going with the low quantity. When there is a counter trade, always go with the low quantity. So now we will wait if there is a proper scenario, because it gave the breakdown as per our rule. We exited on the stop loss. Now it again activated our counter trade. So we are entering again here with the stop loss here, and now this is our entry immediate on the next candle. Again it took our stop loss. So this is why I am telling you to go less with the quantity. So we will again wait. Again this gave the closing. Again we will enter with the small quantity, go with the next candle breaking down. As soon as the price goes below this, we will, here the price didn't go below the low of this candle. So as soon as this, but here the price didn't go below this, so we didn't, our entry was never activated. So here we will wait. As soon as the price goes below this low, we will enter into the trade. But I think it should go down. Yeah. So here we already entered because price already on the live candle, it already went down. So we are entering in it. And look, it gave, let me put this short position tool. Our stop loss was here. Our first target is 1:1.7 is here. 100 exponential has been touched. We are exiting and booking the profit. So this is how you can take the counter trade. This is first scenario activated 2 times. I think here we cannot say because the entry was not activated. Here entry was activated as price already went down below this. So we gave one stop loss and we then take big profit. And it just keep on going down. Even if it is going down 100 exponential, so this is your swing low. So now you have to wait. As soon as any candle closes below this swing low, then you can another take counter trade with this as a target. So none of the candle has, okay, this candle gave the breakdown. You can put the stop loss here, enter again at here. So I will mark the entry price here. Next candle is here, and this is our stop loss. So I will just move it here. Our next target could be here. Our stop loss could be here. Let's see, and in between our standard ratio should be applied. 1:1.7 almost here. 1:2.3, let's say. 1:3, let's say, if it is achieving or not. If it hits stop loss, exit. Doesn't matter, exit. And now still our entry will be here if any candle closes below this. Okay, so this candle take the stop loss and it gave the breakdown. And you can see, if once you get even experience, what you will do, you will keep the stop loss of here on 20 exponential moving average, because you are now watching that now price is below both of this exponential moving average, and even it is below 100 exponential moving average. So it is taking the resistance from these moving averages. Hope it is simple, and let's see if it is achieving 200 moving average or not. And look at this, boom, didn't touch this 200, but almost from that range it reversed. So hope you know the importance of these moving averages. This is 200 simple moving average, and all these 3 are exponential moving averages. So hope you get the point, and in case any doubt, you can reach out to me or you can comment down below. And you can also join our Telegram group, in which we are talking, chatting, and we are also doing the chat during the market. We are also sharing some trades and knowledge on free of cost. There is no charge, and you can also join my Telegram channel. If you like this video, do subscribe to my YouTube channel, hit the like button, and also do share with your friends. Thank you for watching. All the best.